Hey, good morning, everybody. This is Chris out in Hawaii. Just going through the week here. Let's do some analysis and let's see if we have any pairs to trade here. So, um, the first thing we want to do is we want to look through the weekly wrap. So this is Zero Hedge talking Forex. So I look through all the currencies here just to kind of see, what really stuck out. I looked through the yen, really nothing there. It's kind of back and forth, so that's neutral based on end of day Friday last week. Looking through New Zealand, Kiwi, and then the Aussie. I did see something here in the Aussie, so um, it was interesting that later on in the week, there started to uh, we started to see some U.S. China vibes pick up here, not only from Trump but also from the Chinese government. So a trade deal is looking more and more likely, which bodes well for the Australian dollar. Um, Also, there was some decent retail sales and trade data, which I picked up out of here. So that would put the Aussie as right now fundamentally strong temporarily. Going into Monday morning here for London. On the other hand, the Canadian dollar, the payrolls fell short of estimates. Right here, you can see that. So that puts the CAD, I think, in a weak position right now. Also, just over the wires, we started seeing some talk of the North American trade agreement between the U.S., Mexico, and Canada. There was a resurgence of hesitation there, which I think gives even more precedent to the CAD being weak right now. So we have a strong pair with the Aussie. We have a weak currency with the CAD. So we'll look at the charts and see if we have anything. Pound, Brexit's just all over the place. So once again, fundamentally, it's really hard to trade off of. And if you make profit, hey, more power to you. But very difficult to predict the movement. So, I know Ben is really a believer in this, and so am I, on betting on sure things as much as possible, because that gives us a significant edge in our trade. The euro is mixed data, mixed PMIs. Manufacturing was weak. Services were upbeat. You could see that here. So, I would put the euro as neutral, and the U.S. dollar was kind of a mixed NFP report. So I think traders and the market's trying to make sense of it all, whether this is strong or whether it's weak. So really nothing to do with the U.S. dollar right now. So that's what we have in terms of analysis. In terms of the open, this is something that you want to do every day. I always look at the bullets here so you can see mixed start to the week, so nothing really to look at there. Brexit front, yeah, not messing with that at all. It's definitely a risky trade to take. Looking ahead, we've got some news, but if you look at forexfactory.com, there's really nothing in the red, so nothing high impact, in the markets right now. So really, the Aussie CAD is kind of the only move that I saw. So let's take a look at the charts and see what we have here. So I like to use the 1 hour charts. That's just my personal preference. I think it gives you a better look at the entirety of the move. So we have this area of confluence right here. And, if you kind of go back a little bit and just to get a better look at the picture, you can see that this is kind of a hesitation zone, that goes back a few days here. So I like this level. One thing that really stands out to me here is you can see that it bounced right off of the 50% fib. So I think I'm going to test the waters here with the move. So the fib is at 94.82.5, so I have a 3-point spread on my broker. So I'm probably going to go to 94.85. But what I typically do is I'll go in with a small position, and if it starts going up after it bounces off, I might get into the 38% fib, and I might even get in again at the 23.6% fib. So I build my position as it goes my way. On the flip side, my stop loss area is going to be below this, probably about 20 pips. So I'm looking at 93.95 to 93.90 maybe. You don't want to put it right below here because generally stop hunters will spike it down to take you out because they see liquidity, because a lot of people put their stop losses right here. So I'll send that out, but that's what I'm looking to do for today, and we'll see if we can make some profit. If we can hit our target, which would be the 0 fib, we're looking at 68 pips right there. If it goes our way, we're probably looking at another 52 pips there, and 31, so about 140 pips. And the loss, if it just goes straight through the 50 and just knocks us out, we're probably looking at about an 80 pip loss. So good reward to risk ratio there for you. So I'll send that out, and hey, let's hope we make some money here to start the week, guys. Thank you.